Computer Warehouse Group swung to a profit before tax of 53.9 million naira compared to a loss of 350 million naira a year ago. The information and communications technology company recorded a 41% decline in turnover to 5.2 billion naira. Kunle Ayodeji is Chief Operating Officer at Computer Warehouse Group, and he joins me now to break down the half-year numbers. It's great to have you here in studio with us. I think let's start with the top-line earnings and get the reason behind that 41% drop in revenue. We know that in your full-year earnings, you also saw a drop as a result of weaker sales. So is this still the issue? Is it a sales issue?
So the challenge that we have in 2016 half year is because of the foreign exchange challenges. So if you look at last year, we were able to book a couple of our outright sales, which are mostly product that we supply to our customers. However, this year, the exchange rate has actually really impacted on us. And as a result of that, we've actually deliberately held back some of our transactions that we will have done and that will have exposed us to exchange rate fluctuations. If you look at the number last year, we actually made 600 million naira loss on foreign exchange variations. Yeah. So we deliberately decided this year not to do certain transactions, which is why our outright sales is much lower than what we did last year.
What type of transactions are you not doing this year?
So the outright sales are the sale of equipment or licenses to our customers. And the recurrent sales are those ones are more of transaction or contract based. So we've decided to do more of that this year. So if you look at our numbers, last year we did 80% on outright and 20% on recurrent. This year we've done 53% on recurrent businesses, where we've done 47% on outright.
Does this explain why your cost of sales went down significantly? Because
yeah, so what
spending less.
Yeah, what you tend to see is that the recurrent businesses actually have much higher margins. So our margin really actually went up, and more of the recurrent businesses are also not dollar-based. So we are shifting the business more onto things that are more naira-based as opposed to dollar-based because of the foreign exchange fluctuation.
And then we saw a major swing, obviously, in your profit, going from a loss position to profit. You must be quite pleased about that.
Oh, we're very happy with that. So a couple of things that have accounted for that is, number one, the shift in the business from more of dollar-based transactions to more of naira-based. The other thing that things in the areas of cost optimization as well. We've actually aggressively gone, to bring down most of the things that actually push our costs much higher. If you look at our OPEX, we've actually really brought down some of our OPEX, numbers, and also cost of financing as well, because we're not doing more of those heavy outright businesses. We've actually depended less on bank loans and used more of our own cash flows.
Okay, now when you look at your reaction, earlier this year, we saw a negative reaction to your dividend recommendation due to a low return on investment. So with these type of profits and the fact that you've changed your way of doing business, can investors expect your dividend payout ratio to increase?
Most likely. We are in first half, so we're working hard to maintain the trajectory. We're working hard to maintain the profits numbers. Hopefully by the end of the year we hope to close positive note, and we should be able to declare dividend to our investors.
Now the World Economic Forum recently recognized your company as a global growth company. Tell us what that recognition means to you.
So we're one of the companies in our market that are actually building businesses, building platforms that will actually keep us in the long-term future. So clearly, like I said earlier, we're shifting from things that are naira-based. We're shifting from things that are actually of low margin and things that are actually not really sustainable. So if you look at our space in the IT, most things are actually moving more into the cloud, and this is one of the things we started venturing into in 2014, where we started creating platform businesses that are more of subscription in nature as opposed to just sell a product to the customer. What we realize now is that most of our customers are not interested in buying the equipment. So in the areas of ATM, for example, we are moving into things like ATM as a service. So we are telling the banks not to buy the ATM machine, because that's not their core business. They should focus on their core business, which is to reach out to their customers. And we will focus on providing the infrastructure, and we can just ask them to pay on a monthly basis.
All right, let's leave it there. Thank you so much for joining us this morning in studio. Kunle Ayodeji, Chief Operating Officer at Computer Warehouse.